Hey guys, how are you? This is Ishai Breslauer, your host of the CRE Shark Eye Show. Today with us, we have someone who is very, very active in real estate, in commercial real estate, multifamily. Um, Stewart Beal is with us. Actually, he's running a fund, Beal Capital, and we're going to talk all about this. Stewart, thank you so much for being with us. I really appreciate it.
Yeah, thank you very much.
No problem. You know what? Before we even dig into your story, which I'm really looking forward to that, if you could tell us, give us a 2-minute elevator pitch about Beal Capital.
Yeah, okay, great. So Beal Capital is a real estate company that sponsors real estate investments, and we do two things. The first thing we do is we buy 2 to 3 small properties a month, 5-unit, 6-unit buildings in cities in which we manage property already. So as an example, we're buying 2 triplexes side by side for a total of 6 units next week. And then we bought a triplex that we're renovating last week. So that's an example of 2 to 3 small deals we do a month. And you can invest with us in those as a accredited or non-accredited investor, because we structure them in a way that non-accredited investors can invest in. And then the main thing we do is we raise money in funds to invest in pools of real estate. The first fund we have available to invest in is called Beal Fund 2. We're raising $10 million to invest in mid-size apartment buildings in the state of Michigan. And then at the same time, we're also raising $10 million for Beal Fund 3, where we're investing in mid-size commercial buildings, office buildings, mixed-use buildings in the state of Michigan. And when I say mid-size, I'm talking 10 to 25,000 square feet of office or mixed-use commercial space. And then mid-size apartment building to me is 20 to 100 units in the state of Michigan. My company, Beal Properties, manages 3,000 apartments, single-family homes, and office spaces in about 63 cities in Michigan. So our investors are investing in an operation that is of significant size and scale, and we're able to invest in a lot of different areas within the state of Michigan successfully because we're already managing in that area.
All right, that gives us tons of stuff to talk about. I look forward to this conversation. Really cool. Before we dig into what this company does and to the every aspect that you've mentioned, I'm very curious about every single one. Let's start with your personal story. How did you get into this beautiful thing called commercial real estate, going back in time?
Yeah, okay, great. So when I was a young teenager, really actually before that, maybe 10, 11, 12 years old, my father was a construction contractor, and he got all the business magazines would come to his office. And then when they got a little bit old, he would bring them home. And so I grew up reading all the business magazines, Inc. magazine, Fortune magazine, Forbes magazine, Entrepreneur. There was a great one called Portfolio. I would read these magazines cover to cover, and that got me really interested in business. Well, but this was before the dot-com era. This was before technology, Silicon Valley, Bitcoin, all that stuff. And so in the mid-90s, when I was reading these business magazines, it became really evident to me that the way to gain wealth is through real estate. All the people on the Forbes 400 were involved in real estate, that sort of thing. So I became really interested in real estate when I was a young teenager, and I started a lawn care and landscaping company when I was 13, just mowing my neighbor's lawns, But then when I was 16, when I got my driver's license, we incorporated it as a real business and expanded it in Ann Arbor, Michigan, where the University of Michigan was. And when I was 19, I sold that business for $250,000.
Wow,
I got
nice.
$50,000 down, and then $1,482 a month for 10 years, kind of like on a land contract where I was lending the buyer money to buy me out. And that $50,000 when I was 19, I invested that in my first real estate deal, which was a 5-unit apartment house on Eastern Michigan University's campus where I was enrolled. And I did a house hack, a glorified house hack, if you will, where 4 of the apartments were rented and 1 was vacant. I needed a place to live, so I moved into the 5th unit and lived there while I fixed up the rest of the building around me.
What a beautiful start. And, being entrepreneurial in that way and then taking the money and investing it smart. What was the next step after you bought those 5 units going forward?
Yeah, okay, great. So that was 2002. I bought a property in 2003, bought a property in 2004, bought a property in 2005, just kind of natural transition, but not.
I'm assuming those were the small units that you spoke about, the triplexes, those type. Yeah.
Yeah, exactly. And then in 2006, 2007, I had a little bit of a, momentum behind me. I had some businesses, I had some cash generating. I was working really hard, and I bought like maybe 4 properties in 2006, and then 4 properties in 2007. Again, 6 unit, 5 unit, 4 unit, 3 unit type stuff. Well, then everyone knows what happened in 2008, 2009. The foreclosure crisis happened, and in the city in which I live, it's a pretty landlord-intensive city. It's around Eastern Michigan University and close to the University of Michigan in Ann Arbor. Well, in 2008 and 2009, 3 large landlords lost 100 properties to the banks. And those banks put those 100 properties on the market in the span of about 3 years. And my construction company was doing very well. I had cash. No one else had cash. And so I was basically the only person offering to buy these properties from the banks. Wow. And basically what I told my realtor to do is I said, okay, the second the property hits the market, make an offer for half of what they listed it for. And the banks were so glad to see offers, and they had a long list of 1,000 properties that they had to dispose of, that they were glad to accept my offer of half of what they listed it for. So I bought about 50 apartment houses ranging from single family to, I think the biggest one was an 11 unit in the span of 3 years there. And the way it would work is we would buy properties for cash, fix them up with cash, and then once we got them occupied, we would do a cash out refinance to recycle the cash. And we did like 21 in a row with one bank, and then we did 6 with another bank, 6 with another bank, and just kind of kept that same cash flowing through the foreclosure crisis until the foreclosure crisis just kept going on and on. Like in Michigan, the foreclosure crisis lasted into 2014 almost. So right. By the time 2013 rolled around, I was out of cash. I had bought so many properties, but I couldn't get cash out because the foreclosure crisis was dragging on. And so what I did is I said, okay, I'm seeing these good deals still. What do I do now? And that's when it dawned on me to start working with real estate investors. And so I started putting together little deals for friends and family to invest in. And, buying one property with one LLC with 4 investors, each guy or gal invests for 25% interest. And once we did that a couple of times, then I partnered up with some guys who had invested with me, and we did some proper real estate syndications where we raised some, serious money and bought up larger apartment complexes. And that was what I've been doing from 2014 to 2022. In the span of that 8 years, my partners and I have purchased 130 apartment complexes in which there are 6,000 apartments. And then when COVID hit, we started selling the apartment complexes into the hot market, and have sold most of those since. And that's where Beal Capital comes in, is I'm going to do it again, basically. Okay,
so I'll tell you what, I want to go back for a second. I'm very curious about one aspect. We're going to go back. Obviously, we're going to dwell mostly on the multifamily aspect and the commercial real estate and the fund aspect that you are now involved in. That's most interesting. And I'm sure also for the listeners who could be potential investors eventually. But I want to go back for a second. I'm very curious about one aspect. Really appreciate if you could shed some light for everyone. Most people, when they get to a point when there's so many properties out in the market, they're offered to come, or they want to come and throw offers to the bank, just like you have done. They don't have as much capital to go and offer. They have some, but then they have to go and seek investors. You had cash. And I wanted to ask, being young and accumulating the cash, what were your strategy to accumulate cash and not use it? Meaning, what was in your head that actually allowed you, because nobody knew what will happen in 2008. Nobody knew. Okay? So what went in the back of your head to say, I'm going to put this cash away, and I'm going to keep it there and keep it there and keep it there until I'm ready to go and launch. And that's what you did. But what went in the back of your head? I'm really curious about that.
Yeah, so a couple of things there. The first thing is I was a construction guy at that point. I was running a construction company. And when I saw real estate being sold very inexpensively, a lot of people would say, well, don't buy it. It could go down even further, or it's never going to come back. But I knew what it would cost to build these buildings new. And I knew that real estate and stock markets and economies go up and down. And I thought, like, okay, look, if I can buy a property for $50,000 that would cost $300,000 to build new, probably even $400,000 to build new, that someday in the future, this property is likely to be worth $300,000 to $400,000, because properties, in a good economy should be worth close to what it would cost to build new, the replacement cost. So that was my approach in buying the properties. Now, where did I get the cash and how did I save up the cash? I, in the foreclosure crisis, pivoted my construction company to focus on what Obama called shovel-ready projects. And I was able to take advantage of all of the money that the federal government was pumping into the economy with my construction company. So I pivoted to doing projects for schools and the federal government, the state government, and we also did a lot of demolition. And demolition was a really easy way to get money into the economy in the city of Detroit because a lot of buildings needed to be wrecked, and you don't need to go through a 6 months process to pull permits to build a building. You can just go and spend this money on demolishing buildings tomorrow. And so I was able to pull a lot of money, cash out of the construction company through the foreclosure crisis as we were working. And then since I had a construction company, I had employees on staff that were qualified to renovate the buildings that I was buying. Almost every property that I bought was vacant, foreclosed, boarded up, and needed a mid to deep renovation. And since I had these guys working for me on my construction company, I could 1 week have them fix up a house I bought, and then the next week go send them to work for a government project to earn more cash.
I love the idea. I love the concept. So when you came, here's the transition that you went through. And then you needed more capital. You start raising capital, friends and family, the known round tour, what we call. But when in the back of your head, when you said, okay, fine, I'm upgrading from the smaller units to multifamily, to the larger units. I'm going to go up to 100 units, etc. Because it's different. It's what we call, it's going from the SFR single family aspect, from the smaller units. All of a sudden, when you are above the 5 units, especially when you go above the 10 or 20 units, you're definitely in the multifamily commercial real estate aspect. And then you're talking to banks, you're talking about loans, you're talking about getting everything generated. It's a different level. It's a different underwriting. It's a different league. So the question to you is, what got you the decision of, okay, now I can upgrade. Now I want to move up and I want to do the bigger things. What was the strategy over there?
Yeah. Okay, great. So in real estate, buying a 5 unit and buying a 50 unit takes the same amount of work. Okay, you've got to analyze the deals. You've got to make the offers. You've got to get the deal under contract. You've got to get the loan, the insurance, the appraisal, the environmental, get the deal closed, fix it up, manage it. It's the same work to buy a 5 unit and a 50 unit. And so why not go after the 50 unit? There's more positive upside. You're doing something bigger, something better, more meat on the bone to make money to pay for your time. And so that's kind of like a natural transition. Then the difference between a 50 unit and a 500 unit, and the largest property I've ever bought was a 468 unit apartment building. There's about 30 buildings on 30 acres. The difference between buying a 50 unit and a 500 unit, it's definitely more work to buy a 500 unit, but it's not 10 times more work, not even close. Maybe it's 2 times more work. And so again, the natural transition is if you can get investors to believe in what you're doing, definitely go after those bigger properties. With that said, we do buy small properties today because they are many times literally across the street from something we're already managing, or it's a strategic purpose and that sort of thing. And our team is able to handle doing these 2 to 3 small deals a month while also trying to go after some mid-size buildings. My company, Beal Capital, is 2 years old. The 468 unit I bought was with a different set of partners. Now I'm doing it myself. So right now I'm at the mid-size apartment buildings, 20 to 100. I could take that down with my team easily, and I'm trying to work my way back up for 23 and 2023 and 2024 to go after some of those larger properties again. But that's the answer to the question is the biggest deal I ever did, that 468 unit, was the best deal I ever did. And the scale provided a lot of opportunities for success.
You know what? I'll add to that. I'll tell you that, when you talk about the smaller units, it's even harder to manage, right? Because then it falls on you, and to hire someone, it's painful because there's so few of them that many times you have to do it yourself. When you have more units, you can actually hire a manager, sometimes even on-site manager, and to get it done. When it gets bigger, I think that, and correct me if I'm wrong, I would love to hear your aspect. I think when it gets bigger, the getting bigger aspect, what makes it harder, first of all, the devil is in the details, in the underwriting. And there are many more details. And sometimes a little dollar or few cents can affect the entire pro forma and the entire profitability of this whole thing, especially when you talk about value add deals. Okay. So that's one aspect, in my opinion. I'd love to hear yours. And the other aspect, if you could help with that, would be the management aspect. When you're talking about so many units, same idea. When you're talking about the management aspect, many times that's why a lot of operators would say, okay, I'm not managing anymore. I'm going to take a third-party management company. I'm going to do it like that. What do you think about those?
Yeah, so the nicest thing about managing a 250 unit to a 500 unit is you can employ very well compensated quality staff that have their eyes on that property at all times. And when you own a collection of smaller properties, you're doing something totally different, which is what's called scattered site property management. And your property manager might see the property once a month, not once every day like they would on a larger property. So the opportunity to manage that larger property better and more aggressively is there, and then you can afford quality staff to be there. So on that 468 unit, we had between 7 and 9 full-time staff members that reported to that property every day. That's the property manager, the assistant property manager, a leasing agent or 2, the maintenance manager, and then maintenance staff and maybe a grounds person or 2. And with that staff working together, all at the same property, it just seemed like the management was always going really well there. Where when you're managing scattered site, you're pulled in all these different directions all the time. Maintenance guy's got to run here, then he's got to go 30 miles away over here. And so the management's just never as aggressive, as never as tight and efficient on smaller properties. And then in terms of your underwriting, so, underwriting is very challenging on large properties because, like you said, a $10 increase on 5 units each is a lot different than a $10 increase on 500 units each. And if you fail to get that, on 500 units when you expected to, and 10 is just an example, let's say you're using 100, you're going to be off by a wide margin, type of thing. The way that we got comfortable purchasing properties of that size is we had good experience on managing properties smaller and slightly smaller, and then we just raised enough capital so that if the deal needed additional capital or additional time for the value add formula to formulate, that we were comfortable we weren't going to lose it all type of thing. I definitely wouldn't advise anyone to go buy one 400 unit and that's it. There is significant risk in buying larger properties, so I wouldn't go out and buy just one larger property and do this huge stretch to get there. What I would do is I'd build an organization that's buying smaller properties, then mid-sized properties, then a few larger properties, so that one mistake on a large property doesn't sink the overall organization.
Right, doesn't sink everything. Makes a lot of sense. I'll tell you what I want to ask. I want to shift gears a little bit. I want to ask you about your strategy in terms of locations. I know you're doing it around where you are, but what do you look at when you look at certain locations and which cities you like to operate in?
Yeah, okay, great. So I have a unique advantage investing where I am because in any direction from where I'm sitting right now in Ypsilanti, Michigan, near Ann Arbor, there are thousands of apartment buildings to buy. And since I'm in Michigan, they're all relatively affordable, and they're aging, so they need a lot of work, and it's a value add play most of the time. I'm in a very unique situation living where I am. I was just visiting my brother in Denver, Colorado, and certainly there are apartment buildings near he lives, but they're all brand new Class A apartment buildings. I mean, they'd be impossible to buy for a person starting out or trying to start a real estate syndication. And then, of course, I was in some other parts of Nashville and Nashville, Tennessee, and Kentucky this past weekend, and there's no apartment buildings there. Everyone's building single-family homes there. Right. So I'm just like in a unique environment. What I like to do is buy apartment buildings in secondary and tertiary markets where you're close to the action, you're close to the downtown, the bars and restaurants, but you're a little bit farther away, so the real estate's more affordable, both on the acquisition side, and then when you go to rent the units, you don't need top dollar to make the pro forma work.
And you get better cap, right? Right. And you get so it makes a lot of sense. Makes a lot of sense. What I'm curious about, another thing I'm curious about, you've mentioned about, meaning, and I looked at your website, you operate through funds that you've created. And usually funds are an operation, I'm telling you about also myself, when we look at operations and we grow to, for example, we're taking multifamily as an example, okay? You buy single family, triplexes, et cetera, those types. And then you're going to the larger units as we spoke. Usually what operators do is they go and buy and they get investors to invest per deal, right? 100 units, 150, 200, 300, it doesn't matter, per deal. Then when they have several deals and they start getting annoyed by raising capital for each and every deal, then they say, okay, fine, I'll build a fund structure. And they take the licensing for it, et cetera, et cetera, et cetera. What brought you to the conclusion that you were building funds and having confidence doing it and the strategy behind it?
Yeah, okay. So in 2013 and 2014, I bought several properties with individual investors. So each investment, it's its own company, its own set of investors. That takes a lot of work because you're setting up each individual thing, and then you have to talk to the investor about that deal, and they say no. When you bring them this deal, they say no. You bring them that deal, they say no. Then you bring them that deal, they say yes. But then you bring them a fifth deal, they say no again. You know, so what I quickly discovered is, look, let's raise money in what we call a blind pool. So the first real estate syndication we ever did is we raised $2.6 million to invest in multifamily. So we didn't tell the investor we're buying this building or that building. We said, give us money, invest in our real estate syndication, a fund, it's a blind pool, and we're going to invest it in multifamily in secondary and tertiary markets and do a 7% preferred return. And we were able to successfully raise that money from investors who didn't particularly care what building they were invested in, but just wanted to be invested in multifamily real estate. And then we did it again, and we did it again, and we did it again. And that's what we were able to do. But definitely, we've raised money from over 1,000 investors, but we definitely talked to 5,000 more who had all sorts of reasons as to why not to invest in our syndications. There's lots of reasons. There's lots of ways people say no. One is, I don't have enough money. One is, I have too much money and your fund is too small. It's not worth it for me. But then another was, I only invest in single deals. And so we would just say, okay, that's not what we're doing. But if we ever do start doing single deals, we'll come back to you. And we just never did. We just don't do single deals like that on the larger scale.
Right. It's obviously where everybody aspires, meaning the aspiration is to go and build funds. That's everybody. That's where everybody wants to be, just for the reason that you said, because operators like to buy whatever they want to buy, whatever they think that they can handle. And investors don't really know the ins and outs, or they have different preferences, and you don't want to be bound to that. I want to sort of move from that for a second. You've mentioned that you're building a fund for commercial real estate, and you've mentioned office. Two questions about it. The first question is, many people who do a certain asset class say, that's what I do, that's my bread and butter, I don't touch the other stuff. You do. Some, it's not everybody. Some actually do. I did a bunch of things. But I'm saying, what is the strategy behind going from multifamily to the commercial and feeling comfortable with that? That's A. And the second thing, you've mentioned office. I want to talk about office, but you know what? Let's answer the first question first and then talk about office, which is a big, quite huge question mark on the top of the office, hanging out there. But let's first understand, the transition.
Yeah, okay, great. So when you're hyper focused on a geographical area, you're buying multifamily, you've got management teams, you've got construction teams. Okay, here's a commercial building for sale. It's vacant. We can run a BRRRR strategy, a value add strategy on this office building. So the very first property I actually put investors in was not a residential or multifamily property. It was a 14-unit strip center that was 100% vacant because the FBI came and raided the doctor who owned it, and he was running Medicare fraud or something like that.
Oh, wow.
So the seller had to sell the building because he lost all his tenants at once because they were all affiliated with this doctor. He had a dentist's office in there, a doctor's office, all got raided. So it's vacant. So we bought this vacant property and we fixed it up. We rented out the suites over time, and we did a cash out refinance like you would on a multifamily property. I currently own or are invested in about 100 commercial spaces. So we've got 14 over there. We've got 6 over here. We've got 24 over there. We've got a building that has about 30 commercial spaces in it. And we are 99% occupied, even in COVID. And the reason this is these are flexible, simple, multi-unit office buildings. I don't need to go rent 50,000 square feet to a law firm whose all their employees are working from home. Our spaces are small, they're flexible, they can be combined, they can be uncombined, so that I can shift the sizes that people will need. So as an example, we had a lease that was expiring of a law firm in Lansing. This building it's in East Lansing. This building is in Beal Fund 3. You can invest in it today. The law firm had about 7,000 square feet. And they said, well, we don't want to renew our lease because we don't want 7,000 square feet. And I said, well, how much do you want? And they said, we want about 5,000. So what we did is we built a wall separating the 5,000 from the 2,000, put another door into the hallway, and now have that 2,000 for lease. And that 2,000 can actually be split again so that I can rent both spaces to 1,000 and 1,000. And then, so that's flexible in terms of sizes. The other thing is we buy office buildings where if you can't rent it to office users, you can rent them to other users that use commercial buildings. So I've done an urgent care. I did a high school where a high school rented an office space for an alternative program. I did a gym, a hair salon, a nail salon. We've rented offices, storage. We did a school, a nursing school. And so these could have been rented by office, but they were rented by other users. And that's why our buildings remain full. So that's the type of office building that we're looking for, something that's flexible that I could rent to like 10 different types of businesses, as opposed to like if you were investing in a building in Manhattan, for instance, that was an office building, only can be an office building. I wouldn't do that because of the question mark about office that you're talking about.
I got it. So you're talking about also the uses that are allowed by the city. Basically, right. They allow you to do all that stuff, and that's the huge advantage. I love it. It's great. But the interesting thing is, and tell me, meaning it sounds to me that the limitation there is that you have to take, I don't know, a limitation, but it's just, it sounds like that's the fact. It's that you have to take only very small businesses, because if you go up a notch, the more, I would say, significant businesses, like a guy who has, I wouldn't say, let's say a law office, you gave an example. I would say accounting office or any type of office, doesn't matter, a business office that is large enough, once the environment of a building that has an office environment, and not to have storage right next to him, or a gym right next to him, or a school, like you said, or a medical office right next to them to have people sick going in the elevator. The all kind of things that are, when you come to a little bit of a sizable business, they don't want that. They want, like, I wouldn't say a fancy office building, but just an office building to be, in that type of an environment.
Yeah, so we do a lot of stuff that has private entrances. So, for instance, that 14 unit is all private entrances. But I did do a church next to a recording studio, and those guys in the recording studio, they like to smoke a lot of marijuana. And so, yes, there was definitely a conflict between the church and the marijuana and the recording studio, because every Sunday morning, the church pastor would get there and say, "Stewart, dang it, the church smells like marijuana again." So what we did is we put in some air filtration. We built a wall. Like we did all this stuff to like let these two people live in peace. But yeah, definitely we wouldn't be able to do a recording studio next to a professional office space. Sharing the same hallway, the people with briefcases coming in, the rappers coming in, or the musicians coming in, crossing in the elevator. Yeah, that wouldn't be a conducive environment. I don't know, but the way we do it is by focusing on private entrances and very few elevators. But yeah, definitely the one with the high school, we have some office users in that building, and we have a high school in that building, and there has been some conflicts that we've had to work on.
I got it. So you're getting the experience of from all angles.
But we haven't talked about the best part of commercial office space, and the best part of commercial buildings and office spaces is the tenants are much more professional. You don't get nasty, threatening emails in the middle of the night. Just craziness into the email. When an office tenant is upset, they send a professional communication. We don't have vandalism. We don't have cars running into buildings. There's no fires. There's no floods. There's no pest control problems. I mean, managing a commercial office building is beautiful compared to a mid-sized multifamily building.
Yeah, C-class, of course, you're talking about.
Right.
C-class,
exactly.
B-class, yeah, and those.
Right.
I agree 100%. Stewart, it's so interesting speaking with you, and we could talk a few hours more. But you know what? Your time is valuable, and I would like you to tell everyone who's listening. I hope you guys are really enjoying this conversation, because I am. It's definitely enlightening. Stewart, thank you so much for this. I would like you, if you could please tell everyone how they could find you guys. What's the best way to find you guys? Could see the links above below. Go ahead.
Yeah, okay, great. So I'm pretty active on Facebook. You can send me a Facebook message. I'm also active on LinkedIn. You can send me a LinkedIn message. And then my email is sbeal, S-B-E-A-L, @gobeal.com. And I like talking to anybody about real estate. So if you want to invest, contact me. If you want suggestions on property management or a project you're doing, I'd love to talk to you about that as well. And then our websites are bealcapital.com and then gobeal.com, our property management website. So lots of different ways to stay in touch with us.
Beautiful. You guys heard it. I really enjoyed this conversation. Stewart, thank you so much. Really appreciate it. Stick around for a second. I'm going to tell you guys goodbye. Hope you enjoyed this. Take care of yourselves, you guys.